How safe havens works. When the seas are turbulent, the captain steers his vessel into a safe haven. A part of the sea is considered calm and safe. Similarly, investors look for investments that are expected to hold or increase in value when markets are as turbulent as they are now. These asset classes are referred to as safe haven assets. Market downturns are inevitable and are part of the natural market cycle. As an investor, you should prepare yourself as much as possible. You should find a way to keep your money safe until the storm calms down. Safe havens help investors reduce their risk of losses in the event of a market downturn. They can prepare for market movements if they can identify assets that are more likely to hold up or maintain their value when others are declining. But there is no guarantee that what serves as a safe haven in a market downturn will be as safe in the next recession. Therefore, investors should carefully evaluate their options before choosing a safe haven. So, how do you know if an asset will be a safe haven? Assessing the safety of an asset during times of economic uncertainty depends on its correlation with traditional assets, among other criteria. Here's a list of how to make an asset a safe haven. So, let's look at some characteristics of safe haven assets. You see, the desirability of an asset as a safe haven is based on certain characteristics including 1. Correlation assets are uncorrelated or negatively correlated with the general economy and conventional assets. In other words, it can appreciate even when the market crashes. 2. Liquidity. The asset should be easily converted into cash at any time. This will help you enter and exit positions at your own cost, thus avoiding slippage. Slippage refers to the difference between the expected price of a trade compared to the price at which it was actually executed. 3. Supply and demand. The supply of safe haven assets should be limited. There must also be a stable demand to keep the price stable. If there is more supply than demand for the asset loses value. A classic example of such an asset is gold, which has a supply deficit. And whenever there is more demand, the price goes up. 4. Permanence. The asset must not depreciate or in any way decrease in intrinsic value over time. It also shouldn't be too expensive to maintain. 5. Functionality. The asset cannot be easily replaced in the long term. It should provide a function that sustains long-term demand for it. Types of safe haven assets. When you are shopping for a safe haven asset, always remember that you are not buying it to hurt your investment. Instead, the idea is to buy assets that will hold their value and reduce your exposure to a large, extended market downturn. Here are some of the most common safe haven assets and the ways they can help protect your capital during periods of insecurity and uncertainty. 1. Cash is called a true safe haven during market downturns. You know exactly how much it costs and what it can buy. Its major advantage is its liquidity, which can be easily used to meet any immediate obligation. But it makes little or no profit, and when you factor in inflation, the value of the cash investment continues to decline. 2. Government bonds are fixed-term debt securities issued by the government to meet its expenditure and other obligations. They pay interest to investors periodically and are considered low risk due to government backing. Bonds issued by more developed economies are more desirable. Thus, U.S. Treasury bills are the most popular and are backed by the full faith and credit of the U.S. government. Like cash, government bonds have low yields and some even have negative yields. 3. Gold. Historically, gold has always been considered a safe haven. The price of gold is not affected by the decisions of government central banks, and its suppliers cannot be controlled by printing like currencies. Gold has retained its value over time and is therefore used as a form of insurance against adverse economic events. In the event of an extended unfavorable economic event, investors move their funds into gold, which increases the value. 4. Defensive stocks are shares of companies that provide essential goods and services such as utilities, healthcare, consumer goods, food and beverages. They are thought to be safe havens because regardless of the economic situation, the demand for their products will still remain stable. Additionally, in times of economic downturn, companies in the defense sector will perform better as investors increase demand for their shares. That's it for today. I hope you enjoyed the video. Give it a thumbs up and subscribe.